Are you an overwhelmed SaaS founder ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those you don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel podcast, where even if you're on the right track, you'll get run over if you just stand still. I'm your host, Jeff Maines. Well, movement is key, right? The world is filled with flat squirrels who just couldn't make a decision. But since you're listening to this, I expect that you are progressing, filling your think tank, riding waves, innovating, and iterating. And that is awesome. So whatever you do, keep on moving. You know, I'm continually inspired by SaaS founders in our executive navigation and boardroom groups. If you don't know what that is, we have a growth accelerator of SaaS founders and CEOs collaborating to grow revenue, boost valuations, and just be around people who make us better. Like better what? Well, like better leaders, better husbands and wives, better parents, better business leaders, and just better humans. But we spent time together this week and have a really unique way of working together in sprints. So while the rest of the world works in quarters, we get in 6 to 8 hyper-focused sprints a year and then hang out together at the end of every one of those. And I love to do that. But I heard win after win after win, roadblocks removed, deals closed, relationships built, obstacles obliterated, and most importantly, just absolute clarity on next steps. I love that. I mean, the progress is just astounding. And it's not like it's uncommon at all, but it never, ever gets old. And to see the movement and progress and just faces light up talking about it is just awesome. So it's a true honor to hang out with such awesome people who also happen to be stellar SaaS leaders. So big shout out to our clients in executive navigation and boardroom, and everybody keep on moving. Progress is absolutely inspiring. Well, in last week's episode, Jan Kaminsky, Chief Sales Officer and co-founder of AppLover, had a great conversation about development, future of technology sales, and more. Great conversation for anyone building tech, selling, outsourcing, or thinking about it. And I'll bet that's you. So if you missed it, go back and check it out for sure. Our current guest this week is Andrew Butt, co-founder and CEO of Enable, a modern cloud-based B2B software solution for rebate management. Distributors, wholesalers, and manufacturers across 50 industries now have a seamless, easy solution to execute and track their full range of trading programs. You know, Andrew and his co-founder actually met 20 years ago while learning to fly helicopters. How about that? Another honorary member of the SaaS Fuel Flying Club. Enable is their third business together. I love that. When founders stick together and they do multiple things over and over, serial entrepreneurs. So this is their third business after 2 other exits. So welcome to the show, Andrew Butt. Well, hey, Andrew, welcome to SaaS Fuel.
Hi, Jeff. Thanks for having me.
Yes. Well, you know, can tell a little bit by your accent, where are you originally from?
Yeah, originally from the UK. So I was born in the UK, spent a lot of years there before moving to the US.
And so now you're in San Francisco, and this is your third startup.
That's true.
So tell me a little bit about that. What has that journey been like?
Sure, absolutely. So, I mean, my 2 passions in life have always really been computing and also flying. And so as a child, I wanted to be an airline pilot and stumbled into an airfield in the UK many years ago and started helping them with their IT, really. This is going back to the kind of late 90s, so a long time ago now. And they gave me some great advice, which was they said, stick to computing as a career and aviation as a hobby, which was advice I followed. And it was really through the flying school that I met some really fascinating entrepreneurs and business people who all had kind of software and IT challenges. And I was there to help. And that really led me to form my early businesses prior to Enable. So that's really where the whole thing started. And those early businesses were really service companies. So, you know, building software for other people and managing those software solutions on their behalf.
That's great. And so are you a pilot yourself? I mean, you have the aviation background?
Yes, absolutely. So I became a qualified helicopter pilot quite early on. And then I actually did my fixed wing, as it's called, later. So both planes and helicopters. But I don't get much time for that anymore.
Yeah, that happens a lot.
Yeah.
I'm a pilot myself, but don't get to fly
Oh,
nearly
really?
as much as I would like. It's interesting. A lot of the people I've interviewed on the show have been pilots.
Yeah.
So maybe we ought to just call it pilot fuel, or it's a show about flying.
Yeah. Well, I have to ask you then, what were you flying? What did you fly, Jeff?
Primarily fixed wing, not a helicopter pilot. Would love to be, maybe an additional rating one of these days.
Yeah.
It's primarily single engine land, some multi-engine, instrument rated.
Yeah. Fantastic.
So, yeah, seaplanes will probably be a rating I'll do here shortly. Just, fascination. What would it be like to land on water?
Exactly.
It'd be fun. So I understand that's where you met your co-founder was through aviation and learning to fly.
That's right, exactly. So I met Dennis Short, who was learning to fly. He was running and is still running a very successful distribution company in the UK. It's now the largest distribution company for Procter & Gamble, Unilever, and Gillette, and many other brands. And so we just got talking really through the flying school, and he showed me about the amazing growth he was experiencing and some of the challenges around the data that he was trying to manage. And that eventually led to the idea and the inspiration really behind Enable that we formed together.
And so then tell me about the businesses that you've started together and just what that journey has looked like over the years.
Yeah, sure. So in the very early days when we first met, we really combined forces and launched a couple of services businesses together. So I was this sort of techie guy, who was able to build applications and was very naive when it came to business. And he had great kind of business knowledge and networks and connections and expertise in that area. So the early businesses were really, again, building software. And this was when the web started to take off in a big way. So, year 2000, web software, all software now is on the web, isn't it? But it was a big thing back then. So we were kind of building software applications for other people. And sometimes we found we were building software applications for software companies. So they were building a great product and outsourcing the actual development work to us. And so that kind of gave us the inspiration and the desire to build our own product, rather than just building products for other people. We wanted to kind of build our own thing and get lots of people using it and feel that sense of ownership and impact. So that then led eventually to Enable being formed as a SaaS company where we launched our own product. And we're probably talking now about kind of 2016, so 5 or 6 years ago when we launched Enable.
And so what does Enable do? How does it work?
Sure. So Enable is a software platform that is used primarily by manufacturers, distributors, and retailers. And they all have complex trading agreements between them, which describe business goals, business plans, and incentives and rebates linked to those goals. So it's all about, if I purchase a certain quantity or a certain value of product and sell it to a certain customer type or geography, I will then achieve and earn an incentive. And this goes on across the supply chain in many, many different industries. It's become a huge proportion of profitability in both retail and distribution, because this is how to really drive behavior. If you say to someone, do these various things and then we will send you a check, that tends to get quite good results. Whereas if you just say, we'll give you a massive discount and you can buy the thing and then do what you like with it, which usually means do very little, then that doesn't drive behavior. So Enable is a software platform to manage all of that. We're a tool where you can actually create these agreements, track these agreements, execute them, and really our software helps people to drive their business better and make more revenue and profit through the use of incentives and rebates.
That's really smart. And you're correct. I mean, the industry has moved a lot that way. And sometimes one incentive downstream is dependent on upstream. So you really do have a lot of complexity in how those work.
Yes, exactly. And it's only becoming more complex because companies want to be much more specific and much more targeted. So, they want to get specific types of products into specific markets, and they want to hit certain goals in very specific time frames. And, if you're a retailer or a distributor, you will have probably hundreds of suppliers that you're working with and hundreds of thousands of products. So if you imagine you've got these different agreements, different deals, different conditions tied to all of that, it's just a huge amount of data to try and try and manage.
Sure. And you definitely want to make sure you're collecting all of those incentives, not just what you're entitled to, but actually driving that behavior so you're not leaving money on the table.
Yeah, exactly. And you're right, there's different tiers of that. So you're absolutely right. The first point is just collect what you're entitled to, which, by the way, most people don't do. They think they do, but because they're not tracking it very specifically, then there's a lot that gets missed through the cracks. And, we've literally seen millions of dollars that is missed by a single company. So it's potentially very big. So that's just claiming what you're entitled to. And then to your point, it's also about how can I actually do better with my existing agreements. So I've got all these agreements in place. How could I direct my day-to-day decisions, buying and selling decisions, to do better? And then there is how could I negotiate even better agreements in the future as well? So all of those things.
Makes sense. So how did you come up with the idea for this?
Sure. So this was very much going on in DCS, which was Dennis's company and is Dennis's company to this day. And so DCS really sits between the manufacturers like the Procter & Gamble's and the Gillette's, and then a whole long list of distributors, wholesalers, retailers across the UK and overseas as well. So really the core of DCS is central distribution. And so they're buying products from those manufacturers and then combining them together, providing all sorts of added value services and selling it downstream. And these incentives and rebates were a growing part of the whole business model. Downstream customers expected them, manufacturers wanted to use them, they wanted to move away from discounting and towards incentives and rebates. So this whole thing was shifting at pace. And there just wasn't any modern software to do this well. Most ERP systems claim to do this. And to be fair, some of them do it in a basic capacity, but it's almost just like an afterthought. It's just on the side. And so what we actually find is most people use Excel spreadsheets to track what could be billions of dollars of revenue.
Wow.
So we kind of looked at the market and we just couldn't find anything. And also we were being asked by a lot of companies to build it for them. So they were saying, could you build us a system to manage all of this? And it didn't take us too long to realize this is a huge product opportunity.
Oh, that's interesting. So was the original development, was that more client driven or was that based on your own needs inside DCS?
So initially it was quite okay. So there was both. So DCS, as I said, definitely had a need, and so it came from there. But also we were getting requests from other companies, and when we had an early version of a system for DCS that we could show to other companies, that confirmed the interest level. So for a while we were building this on a custom or a bespoke basis, and we built it for say 3 or 4 different companies as well as DCS, and that was how it kind of grew in the early days.
Okay. And as a technical founder or co-founder, how important was it to have somebody that was really on the business side as a co-founder? What was that relationship like?
Sure. Well, certainly it was critically important. I didn't have the experience back then, and we're going back originally probably quite a long time. So early 2000s when we first got together, well before we actually launched the product that we have today, and so that was very important. What I found is I became very interested and fascinated by the business side of it, and that's always been one of my traits. I've always wanted to run before I could walk, and so that was the thing that really interested me. And I wouldn't say I was a gifted technical founder or anything like that. I could do some programming and I could build a few things, but quite quickly I realized that my interest and thing I wanted to pursue was the business side, and I could bring in people far better than me on the technical side.
That's a great trait to have. I mean, so many founders want to hold on, and instead of hiring people smarter and better than them and really accelerate. But I love that the curiosity and just that pursuit of wanting to learn more, not just being satisfied with I'm good in one area, but that innovation is really a big driver for growth.
Yes, sure. No, I think curiosity generally, when we're looking at candidates and interviewing now, then is a great trait, isn't it? Just people that want to understand and ask questions and ask good questions. So I would completely agree.
So what are the things that you look for in hiring, ideal people for your company, whether technical or in other areas?
Mm. Yeah. So, I mean, at this stage, we're now kind of over 300 people and growing very rapidly. And I personally am not doing that much hiring because we've got kind of leaders who do that.
Sure.
But I could but in terms of what I would look for and what we look for as a company, it is down to kind of attitude. It is down to, again, willingness to learn and ambition and that curiosity again, because we've had a lot of success in training people. So we've brought people in who have those attributes and are very intelligent and capable people, but they might not be experienced. And then we've got great kind of enablement programs, training programs. We can develop people throughout their career. So I'd say that's what we've done for a long time. Since we kind of launched our SaaS product and then quite quickly after that raised capital, we're growing at quite a fast rate. And so we have also brought in some really experienced people as well that have got that kind of done it before type experience. And I think the success is creating that fusion between the two. So you want to be continuously bringing people in who aren't experienced, but who are very capable and have high potential that you can develop. And then you also need to bring in some people that have got that done it before experience.
It's a really good balance. So what have been the transition points as you've continued to grow and fundraise and now 300 people is pretty big. So you're not managing directly, you're managing through people and probably 2 or 3, maybe 4 layers of people. So what have been the changes that you've had to make as a leader to accomplish that?
Sure. Yeah, I mean, I think in terms of the company transition points, the UK is very different from Silicon Valley. And the whole approach to running a business is to get to profitability very, very quickly and then grow steadily and remain profitable. And that's great generally, but when there's a huge opportunity and a huge market, then that approach is just too slow, because if you want to be the market leader and you grow profitably from day one, then you'll just never get there. It'll take 100 years or something to get to the market leader, and someone will overtake you. So I certainly learned a lot in the UK and had great mentors and a great kind of grounding, but realized to really fulfill the potential, we would raise capital, and the place to do that would be the US. And I looked at the UK, I looked at Europe, and I also looked at East Coast and West Coast. And I think things have changed a bit through the pandemic now, and the playing field is a bit more level. But I would still say that Silicon Valley is great, and the kind of attitude towards investing and opportunity and risk and reward is brilliant out here on the West Coast. So I came out here 2 and a bit years ago. It was kind of beginning of 2000. It was just before the lockdown, so quite a crazy time to do that. And I literally had nobody here. There were no employees. We had got some early customers here already that we were supporting from the UK, but there were no employees here. And I just started knocking on doors, and I said to VCs, I'm going to move here, or I have moved here, I'm moving here right now. Will you invest in a Series A? And really, since then, the whole thing has just exploded and the growth rate has rapidly increased. And it's been like a bit like a self-fulfilling prophecy in that we raised the A. We used that investment to start hiring quite rapidly. Some great people, again, some really experienced people that have grown SaaS companies at this rate before. And also, more people kind of on the ground. And that really led to a lot of success, acceleration of growth. And of course, that then in itself attracted more capital. And so that's why I say it's a self-fulfilling prophecy. You kind of demonstrate the growth, you can raise more, and then you can invest that in growing faster again. So I think, coming out here to the US and that first raise was definitely an inflection point. And since then, we've kind of done a huge amount in the last 24 months. And I can then certainly talk about management and leadership and the other things, but maybe I'll pause for a minute so I don't dominate the conversation.
No, that's great. I would love to hear about that. And that is incredible growth. And when we first started talking, I think you had 200, maybe 100 here in the States, and maybe 100 in the UK. Yeah. And so now it's another third just growth. And Series A, Series B, and continuing the rocket ride.
Yes. Yeah, absolutely. So we had 0 people in the US and North America 2 years ago, and now, you're right, it will be probably 150, 160 in North America, and similar in the UK. And so I think part of this has been bringing people in who have been very successful in the past, have got proven track record of hypergrowth, and who have great networks, and who then naturally draw more talent in. So if you can get some of those people into the business, you'll find great talent will follow more easily than just almost cold calling and trying to hire people without that. So that has been helpful. And you're right that we have kind of a leadership group, which is a total of 12 individuals. And then we have, I think now in terms of managers, we probably have about 40 managers in total across kind of US, Canada, and the UK. We've actually very excited to say we've just started hiring in Australia. So we've got our first few people in Australia now as well. So we've got, say, 40 managers and then 12 leaders, and then let's say another 250 on top of that.
What have been the big challenges in moving into different markets internationally? I think having a presence in those markets is a big advantage. Yeah. Instead of trying to do it remotely. And as I love, if you're going into Australia, you have an office there. That makes a lot of sense. And like you said, in California, being here, that was a big driver of success as well. So how have you managed that?
Yeah, we've been driven really by customer demand, I would say. So initially, we were servicing some customers across North America and Australia from the UK and other places as well. And we've had a lot of inbound interest from those different countries. So we really kind of support companies remotely for a while. And then as we can see the kind of interest level there and see that it will support a local team, then we put the local team in. And the US was the first after the UK. And that was really successful. So, putting a few people into the US, that worked well. And we kind of developed a model we could replicate. So we used the same model for Toronto, and then we've used the same model in Australia. And I think what helps is there's just so much common ground for us with our customers. And believe it or not, whether they're in any of those countries I've mentioned, their requirements are actually very similar. And the product we've built is meeting requirements in all of those countries. So that's really quite important. If we'd seen that there were huge market differences and we'd have to start again or launch an entirely new product, that probably would have made us think twice. But in reality, it's the same product, and there's just this huge common ground across all of these different countries.
That's definitely helpful. Are most of the companies you're working with, are they multinational as well? Most of your clients?
No, I don't think so. No, certainly some of them are, but in terms of the majority, I think the majority are specifically in one of those countries, and they're just local companies. And of course, there are differences, so currencies, languages, different types of internationalization. But to be honest, these are quite kind of minor. They're not rewrites of the product. It's been quite easy to achieve.
It's very, very helpful. And understanding that before you just jump into a market, that you really have that understanding, you can have a critical mass. Yeah. Because you know that there's going to be good fit there and you have traction already.
Exactly. Yeah. And then I think as we've kind of got more confident and grown bigger, we're doing this earlier. So, in the very early days, we would take a lot of kind of convincing to do this and open up in a new market. And then we would lower the bar a little. And now we'll be quite quick. So when we see that early interest in a market, we know we can set up in quite a light touch way. We don't need to employ 50 people on day one. We can start with a single digit number of people and then scale up from there.
That's good. So being in different places and, you've got different offices and hiring fast, how do you maintain a corporate culture? Or is that something that you build, or is it more organic and kind of develops on its own?
Sure. I mean, my view is in growing a fast business or in a fast growing business, then we are an exciting mission, and we're making a big impact in the world. We're really helping our customers. We're helping the industries that they're in. We're helping the whole supply chain, because we go into a company and then they invite their trading partners to use our platform as well. So it's a really exciting, high impact journey. And the center of the focus for everyone has to be that journey and how we can add more value to our customers, how we can make it better, how we can go faster. And it is really exciting, and very fulfilling and very rewarding to be on that journey and be having that impact. And also, of course, financially, I mean, our employees all have equity. So every single employee has equity, and they've seen the valuation go up tremendously in just 2 years. And I keep reminding them we're still very small and we're still a fraction of what we will be in a few years' time. So there's that aspect as well. And so to come back to your point, this really attracts a certain type of person, I would say. And because the growth rate has accelerated, and some of our people have been around since before we even launched that product. And when we were more like a services company, then back then it was very steady and maybe easier and lower pressure, but also less exciting and less rewarding. So I think we've attracted new people that really want to be on that journey. Some people have said, this isn't for me. I want something that's just more easy and more kind of stable and less change going on. And then others have absolutely adapted and are really enjoying it. So I think, to come back to your point, that sets the tone, really. That's the overall tone. And then there's lots of things around the edges about, oh yes, these are the ways we behave, and these are great kind of aspects of being at Enable and the benefits and the perks and so on. But to me, that's all secondary. That the primary thing is the mission, and that spans every country and every team and every time zone.
And so what is your mission?
So our mission is to enable trusted trading relationships to serve customers better together. That's our mission. So we see in the supply chain, whatever the industry is, then you've got very disconnected kind of systems. You've got companies using their own homemade systems that are not connected. There's no visibility or poor visibility between those companies, and it results in a lot of internal kind of, should we say, conversations, dialogue, disputes, arguments internally between trading partners. And it does actually, unfortunately, result in a breakdown of trust. So there is a lot of mistrust between manufacturers and distributors and retailers. And what we're really doing, our mission is to really provide more transparency, to digitize the relationships between those companies and equip them, give them the technology so that they can restore that trust, they can build that trust, and then focus outwardly on their customers rather than kind of arguing with each other. So that is our overall mission.
That's great. We're going to take a quick break, and when we come back, we're going to ask Andrew about the biggest lessons he's learned in building the companies, raising capital, and exiting. Right after this.
Feeling stuck? Hit a growth ceiling? Break free and get growth moving with Champion Leadership Group. Our team of SaaS growth experts works with you to quickly identify and solve 53 root causes for stalled revenue growth. And then we keep revenue soaring with 268 powerful SaaS-specific growth strategies. Many cost nothing and can be implemented in a day. Use them to blow through growth ceilings and keep revenue rocking. Best of all, you never have to walk alone. Our group of mentors and fellow SaaS founders is here to support you on your SaaS building entrepreneurial journey. Get free SaaS growth tools, including your own custom growth game plan at championleadership.com.
We're back, and my guest today, Andrew Butt, CEO and co-founder of Enable, 3-time founder, 3 exits. You've obviously learned a lot along the way. I mean, you can't have that many companies and that kind of success and not learn a few lessons. So what have some of those been, and how have you applied those to future endeavors?
Sure. Okay. So, I think a big thing is really looking at what type of company you're trying to build. So with a services company, which is really what I was doing prior to Enable, it's really about being close to customer. Okay. And I learned early on, you can either be close to customer, you can be an innovator, or you can be the lowest cost. That's the primary. That one of those things could be the primary focus, but you certainly can't be all three. So as a services company, it's all about being very close to customer, understanding what customers want, and really building and delivering whatever they want, or maybe not whatever they want, but to a large extent. So in that type of company, it is really about building something which is quite kind of focused on those finite number of customers. It probably does need to be profitable. You're really selling time, and it will grow steadily. And that's a very perfectly valid business model and has a lot going for it. So that's what I was doing previously. And then if you want to be a product company, that's much more in the innovator category, because with that, you have to really build a product which will apply to hopefully millions of customers, and certainly thousands and tens of thousands of customers. So you can't do whatever a customer wants, and you've got to be very, very focused. And that's a very different type of business where you need scale, and again, to get to that profitability, that will take some time. because you're going to need a lot of customers to get to that point, and you probably will need to raise capital to get there as well. And then the lowest cost is not really worth entertaining, because it's difficult to be the lowest cost for a sustainable period. So if you focus on being lowest cost, then you might do that for a little while, but it's not really a sustainable strategy. So I guess really deciding what you want to be is important. Which of those do you want to be? Do you want to be a services company? Do you want to be a product company? Do you want to grow rapidly and be a global scale, or do you want to kind of keep quite small and be profitable from a very early stage? And so that's, I'd say, a key learning lesson for me. And I've kind of had some experience of both, because again, the previous businesses were services oriented, and then Enable today is very much in that product camp.
Yeah, I think having that clarity is really key, and just knowing what kind of company you are. I think you really nailed that. So how important is it, that being the case, how important is it to learn to say no?
Oh, it's extremely important. And I know it's a cliche, really, isn't it, about prioritization and the Steve Jobs phrase of 1,000 no's for every yes, and so on. Everyone kind of says it and they think they know it, but most of us, me included, can do a lot better at that, and on those ratios of saying no a lot more. And I think having that real focus. So in a product company, then really getting down to what is the one use case that works for one set of buyers, in one industry. What is that use case? And really knowing that intimately and focusing on it and being able to replicate and get to scale before diversifying and looking at other things. Because human nature is we always look at too many things, we take on too much, we spread ourselves too thin. And like you said, having that clarity on what is it we're focusing on here is just extremely important. And I think determines the difference between success and failure.
Without a doubt. Yeah, that's interesting. I think we can probably all do better at being more focused and saying no. When you build out that use case, how do you know when you have the right use case? Or
sure.
when you need to adapt?
Yeah. Well, I think, any use case where you can get, let's say 10 customers. I know Jason Amkin on SaaSter, he used to talk about unaffiliated customers. So they can't be your friends or family or companies that kind of, or best friends together, but getting, say, 10 completely unaffiliated organizations to use your product and pay for your product and give you, a case study, and where they can show the value, and where they continue using the product, they renew. That's, I'd say, a basic product market fit. You've got one product, one piece of code which is being used in 10 companies, they're paying for it and they're getting value. It's worth more to them than what they're paying you. That is a use case. And if you can get 10 and you've got 10 case studies and 10 people that will renew, you can get 100. And if you can get 100, you can get 1,000 and so on. So whether that's the best use case, I think, the grass is always greener. I think you can always look and say, oh, well, I've got another idea over here, which might be better. But I think if you can get to that kind of critical mass, then it's something that's probably worth pursuing.
Oh, that's really good. And I love that the grass is always greener. As entrepreneurs, I think we always look at that. It's like, well, what if I tried this? What if I tried that? But really having that focus.
Exactly. There's no shortage of ideas in the world, is there? And there is definitely a massive shortage of execution. So it's about just taking something and getting to that initial traction. And then once you've got that traction, stick with it and focus on it and don't do anything else.
Grow fast. Grow fast or die slow.
Absolutely.
Yeah.
Very true.
Focusing in. So tell me about raising capital. What has that experience been like for you? How did you decide to do that versus bootstrap, or look at alternative sources of funding?
Yeah. So I've been bootstrapping for a long time, and the previous companies, one we kind of ran as a services company, and it was profitable and growing steadily, and we were, it's generating an income, if you like, so generating an income, but it was very steady growth, and it was never going to be a major global company that would go public, for example, and have a huge impact in the world. It was just a small company. Another one, we bootstrapped, and it was acquired very early by a UK private equity company, and they kind of did a buy and build strategy. So they'd bought a bigger company, and then they were bolting on smaller companies, and ours was one of those. And I could kind of see the returns from that the private equity company made. And then we certainly borrowed some money along the way as well. So had great banking relationships and able to get some debt. But I think, before I say but, I think that was for many years, and that was good. It was a good experience. We grew steadily. We had a nice income. It was a good lifestyle. We had happy customers. It was fine, and I did that for 10 years. And really, I just had this desire to build something on a much bigger scale. And again, I'm using the same words, but creating something of impact, building something of global consequence that would really impact thousands and thousands of companies, not just be a really small company in the UK. And it was clear to me that the only way to really do that was raising capital. Debt wouldn't get us there; it just wasn't sufficient. And bootstrapping again would just take too long. I know there are some people out there that have been clever enough to bootstrap their way to an IPO, and certainly that is possible. But I think after bootstrapping for 10 years or however long, I didn't think I could do that. So it was just obvious to me that was my desire to create something on a bigger scale, and raising capital would be the way to fuel that growth.
So what do you think about the capital markets today as we look out into the future? Do you think they're going to stay like they are, or will the economy affect them?
Yeah, I think humans overreact to everything, but in both ways. So looking now at the fact that the markets are massively down, I think the peak was November last year when they got to an all-time high. And so now we're kind of, 8 months or whatever on from that, and they've come down quite a lot. They're still a lot higher than they were, say, 2 years ago. And so there's a lot of doom and gloom around, and I'm getting lots of emails like everyone else is saying the world's coming to an end and you won't be able to raise for years. And I think it's nonsense. I think it's just a huge overreaction. I saw exactly the same thing at the start of the pandemic, that we closed our Series A in February 20, and then within a few days, the stock market was going down. The lockdown was a couple of weeks later, and people saying, you won't be able to raise again for a long, long time. And within a few months, valuations were soaring. So when you look at, say, the Nasdaq over a 5-year period, it is just up and to the right, or a 10-year period, it's just up and to the right. So I think this is just another blip. It's good discipline for founders and companies to assess their cost base and their burn rate and ask those questions. But I don't think it's a long-term impact.
I agree. I think there will be some impact, but those are things that we should be watching all the time anyway.
Yes.
And sometimes it's easy for companies to forget. I think that capital is always going to be flowing. Things will always be like they are, but those are things we have to pay attention to. Fundamentals matter.
They do. And I think building up the balance sheet and having that runway is a good discipline. And it does take time. So when you're bootstrapping, of course, you're cash generative. You have to be cash generative, really. And so that provides some insulation. I think when you're burning cash, having a good runway is important. And I remember at our Series A, at the point we raised the Series A, our cash was very low. It was very tight. We didn't have much cash at all. And then we did the Series B, and at that point, we then had a good runway already. So we didn't really need the Series B when we raised it, but we were able to raise it because the company was doing well. So you can build that up over time. And I agree, if you're running a company where you expect you can raise at short notice, then that's probably not a good idea.
Sure. So if you didn't need the Series B, what was the driver behind doing that? And because it dilutes the cap table. So what was the reason to do that?
Sure. Well, we knew we would need it at some point. So again, we knew to grow up and build a big global company and go public, we'd definitely not be able to do that on just a Series A. So we knew it would be needed. And I think it all comes down to, as you say, valuation and dilution, and also the extra value that a new partner can bring. And so Norwest, who led our Series B, Sean Jacobson, who led that and joined our board, he really demonstrated a lot of value. He had great network, really good knowledge on things like partner alliances and how to build up a partner channel and many other things. So we really liked him. We liked the firm. And the performance of the company meant that the kind of valuation we were commanding was strong and the dilution was minimal. So we just really looked at all of that and said, we'll need this at some point anyway. And the overall economics make a lot of sense.
That's good. And I think that's a great answer. I mean, because it wasn't just dumb money poured in. There was actually a lot more value in that, in the partnership. And I think that equity partners can be really, really good, or they can just be dumb money.
Well,
or sometimes not good.
Yeah. Someone once told me, and it was a VC, they said that statistics show that a partnership with a VC lasts longer than a marriage. So that's why you need to be sure when you go into business with a new investor that, this is certainly a 10-year, could be longer, but certainly a 10-year commitment, and you won't be getting a divorce in those 10 years. So as you say, really important to diligence the partner and diligence the investor coming in, just like they're diligencing you, and make sure it's the right fit.
So what are the things that entrepreneurs should be looking at if they're looking on bringing in private equity? What are the key things that you found in your business relationships?
Yeah, so there's so many different types of investors who have very different kind of remits and expectations and plans. And in Silicon Valley, it has been all about building a enduring company over a long time period, and most investors here are looking to take companies public, and they know statistically that not that many will achieve that milestone, and some will be acquired and some won't make it at all, but their time horizon is quite long term, and they're willing to be patient. And so that, I think, is really important, because if you're a founder who wants to do that, as I am, and then you bring in an investor who's looking to flip in 3 years, then that would be a huge problem, because just as things are starting to take off, you've then got your investor saying, I want to sell my equity. So I think checking that overall kind of compatibility and DNA, sharing the forward plans to say, we are going to be burning X amounts, and here's my plan, here's my financial plan for this year, next year, the year after, and this is what I expect to deliver. I expect to convert X amount of burn into Y amount of new revenue, and making sure that that's exactly what the investor is expecting. So I think overall compatibility and DNA is very important. And then obviously how you get on with the person, because you'll be working with them and talking to them quite regularly, and there will no doubt be bad times as well as good times. So how are they going to react when things are not going well? So those are the main things.
That's really, really helpful. But what role have mentors played in your professional development and leadership?
Sure. So I think I've had certainly mentors who have been and are entrepreneurs, and they have great vision and building a company, building a product around the vision. So there's that kind of, I guess you could call it, visionary mentorship. I'd say from a sales point of view, and again, whether I'm pitching to an investor or a customer or a prospect, and also kind of coaching a sales team, I'd say I've definitely had mentors in that space, that have coached me on sales and selling. And then I'd say also on kind of the financials and economics behind a company. So understanding a P&L, understanding a balance sheet, and again, understanding about fundraising, capital raising, that's been another type. So those are probably my things, really. It's kind of visionary, sales, and economics. And maybe where I'm I'm not so strong is on the people side. I think I'm probably not a very good manager. So I hope I'm quite a good leader, and I'm quite visionary, and I think I can inspire people, and whether they're inside the company or outside the company, but I'm not kind of managing lots and lots of people and making sure, that's not really my big strength, I don't think. So unfortunately, I've got some very good leaders and managers around me who are better at that than I am. That's
good. Well, what is something that you wish someone had told you back in the early days when you were just starting out, first building companies?
I think some of my realizations about building a global product company, a software company, and working with investors, I guess it would have been, I would have liked to have known that sooner. I think I could have probably done this faster and got started several years earlier. And if I'd known then, let's say, I moved to the US in 2020, if I'd known in, say, 2015 or something, what I knew 5 years later, I probably would have just done it faster. Because it has been a great journey so far. It's still early days, but I certainly feel very privileged to be where I am and have the support that I do today. I think it could have been done sooner.
I think we can all look back and have those moments. Like, if I'd only known 5 years ago what I know now. That's great. Well, what advice would you give somebody who is, early stage? You're definitely, much further along than a lot of SaaS companies out there. But let's say somebody running a company between 1 and 10 million. what would be your advice to them and what steps they should take to get to where you are today?
Sure. So again, I think it all comes down to what the individual wants, what they're trying to create, what they're trying to build. And the path that I have taken, and I'm pleased to have taken, is hypergrowth. And so with that comes very high expectations. And we really have to, and we will take this company public and get a significant kind of outcome for our investors. That's our responsibility to deliver. They've believed in us, they've put their trust in us, they've invested in us, and that's our duty to deliver. And that is one particular path. And I've gone from a situation where Dennis and I owned 100% of our company, and we had no investors, and back then we actually had no options, or none of our employees had any equity. It was just the two of us. So things were simple. To now, we have got some really great and significant investors on board. We've given equity to all of our team, every single employee, and it's a very different world. I think for some people, they might want more of a middle ground. So they don't want to be kind of doing hyper growth and be committed to build I'm making up numbers here, but let's say a $10 billion company. They don't want to really be on that journey, because it is challenging, and you are working 20 hours a day and at times, and it is, it's not,
sure,
there isn't time to do any hobbies or anything like that. That's fine for me, because this is my hobby. This is the thing I want to do. But I can understand completely. There will be people where they've got, as you say, 1 million of ARR, 5 million, 2 million, whatever, and the business is doing well. And maybe they're doing, 40, 50, 60, 80% year-over-year growth, and maybe they're burning very little. And that is a different path. It's very impressive and a very good path, but it probably doesn't have the same expectations as a hypergrowth company. So I think I'm sort of talking a lot here, aren't I? But I'm saying being really clear about what is it you want, what you're trying to do here, and then going on the appropriate journey and bringing in the right investors and also the right people, the right employees that are on that journey. So that would be very important.
That's great. Well, where can people learn more about you and more about Enable online?
Sure. So enable.com, we've relaunched it recently, and there's a lot of resources there. So we've got lots of videos and all sorts of things, webinars. So enable.com is a good site. And then look me up on LinkedIn. And that's a great way to connect. So I'd be very happy to connect with anyone and share messages on LinkedIn.
Very good. And we'll make sure and link all of that in the show notes. And Andrew, I really appreciate the conversation. Love having you on the show.
Well, thanks, Jeff. Thanks for having me.
Thanks again to Andrew for coming on the show, sharing your insights and resources. You can learn more about Andrew and Enable at enable.com. Check them out on all social media as well. And as always, all links, highlights, resources, and full show notes are available at saasfuel.com. As a reminder, if you're enjoying the show, please leave us a rating and review at ratethispodcast.com/saasfuel. I'll be sure to read those out on a future episode, or give us a shout out at 903 SaaS Fuel. Use the old phone there, 903 SaaS Fuel, and I will play your comments and give you and your company a shout out on a future episode. Tune in next week for a conversation with Sarah Well, founder and CEO of Dropstat. Sarah is a critical care trauma nurse turned entrepreneur and SaaS founder. Dropstat is changing how hospitals staff nursing shifts and create safer patient care and better outcomes in the process. So be sure and come back next week and check that out. It is an amazing conversation. So until we meet again, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/saasfuel. We'll be sure to read these out on future episodes.